the last decade or so, startup culture has been dominated by pretty much one main idea: go big, grow fast, and become a unicorn. The unicorn narrative, based on billion-dollar valuations, rapid scaling, and huge funding rounds, has shaped how funders build companies and how investors decide where to put their money. Move fast and break things has always been a mantra, but that model has also shown its fair share of weaknesses. Not every startup can or should chase explosive growth, and it definitely shouldn't do this all the time. In fact, in more uncertain economic conditions, the pressure to scale quickly has often led to burnout, overextension, and in some cases even total collapse when funding dries up. That's where a different type of startup thinking has started to gain traction: the camel startup. Instead of chasing speed and hype, camel startups are designed to survive. The idea comes from the image of a camel in the desert, a resilient animal that can store resources, withstand harsh environments, and keep moving forward even when conditions aren't ideal. In startup terms, that translates to businesses built for endurance rather than explosive growth. A different approach, but one that can be equally as successful. A camel startup is a company that prioritizes resilience, efficiency, and sustainability over rapid scaling. Rather than relying on constant external funding or aggressive expansion, these businesses aim to build something stable from the beginning. Basically, camel startups are focused on staying alive first and scaling second. And that doesn't mean that they lack ambition. It just means their ambition is structured differently. Instead of trying to become the biggest company in the shortest time possible, they focus on building a business that can survive different market conditions and continue operating even when investment slows down. This makes them fundamentally different from the traditional unicorn model, where growth is often prioritized over profitability in the early stages. The rise of camel startups isn't happening in isolation. Nothing really does. It's closely linked to shifts in global funding environment and broader economic uncertainty. In recent years, venture capital has become more cautious than it used to be. Easy money is no longer easy, and investors are increasingly focused on fundamentals like revenue, efficiency, and long-term viability. That change has pushed founders to rethink how they build companies. At the same time, many startups that grew rapidly during boom periods have struggled when market conditions changed. When funding slows down, companies that rely heavily on external capital often find themselves under pressure very quickly. Camel startups, on the other hand, are built to handle that kind of volatility. Because they tend to spend more carefully and focus on early revenue generation, they are less exposed to sudden shifts in investor sentiment. The easiest way to understand camel startups is to compare them with unicorns, the traditional metric for a successful startup. Unicorns are built around speed. The goal is often to capture market share quickly, even if that means operating at a loss for a period of time, and the expectation is that scale will eventually lead to profitability. Camel startups, however, take the opposite approach. Instead of prioritizing rapid expansion, they focus on financial discipline from day one. They tend to be more conservative with hiring, more careful with spending, and more focused on building sustainable revenue streams early. Flexibility is another factor that separates unicorns from camel startups. Camel startups are often better positioned to adapt when conditions change because they haven't committed to high cost structures that depend on constant growth. While the unicorn narrative still dominates headlines, investors are really starting to value resilience. Camel startups may not deliver the same explosive returns in the short term, sure, but they are often more stable and more predictable in terms of growth path. And in uncertain markets, especially at the moment, that stability becomes extremely attractive. Investors are also becoming more aware that not all high-yet startups are built on solid foundations. As a result, there is growing interest in companies that may grow more slowly but are far more likely to survive in the long term. It's unlikely that camel startups will replace unicorns entirely. After all, unicorns still very much have their place in the world of startups. Both models are important, and it really depends on the industry, market conditions, and founder strategy. But what's becoming really clear is that the camel mindset is becoming more relevant than ever before. In a world where economic conditions can shift quickly, resilience is becoming just as important as growth. For many founders, especially those building outside of heavy venture capital ecosystems, the camel approach offers a more realistic and sustainable path forward. It reframes success away from speed and valuation and towards something more fundamental, building a company that can actually last.